The clue here is FinViz. You can see that S triple Q kind of dictating along with our indicator, giving us that heads up like, hey, some of these tech stocks could be a little toppy. What we're looking at today, just for instance and for example, is a market that is absolutely ripping on a Friday. So, you know, it's ripping. All three indexes are up. But if you look a little bit deeper, you can see a couple things of concern. The first thing is that ultra speculative assets like Bitcoin, Ethereum, those are starting to sell off. The other thing is we're in the beginning of the month. That leads me to the next thing that I want to go into is when we're looking at these charts and we have these uptrends, big macro uptrend on the 45-minute chart could just break right out of this range. And in fact, looks like it probably will break up out of this range, but we do have big tech earnings coming up next week. So, something I wanted to bring up is what's a scenario where you might short the market even though the market's up, right? Normally, you don't want to go against the grain. Now, if we go on the Nasdaq, let's just reset the chart view on the 1 minute. You can just see an oscillating market just over and over again. Now, if we go out to, let's say, the 15-second chart, you can get a little bit more movement there, but you're still seeing some weakening trends here demonstrated by these flat lines in our Illuma trend on our indicators. One other thing that I want to show you is the advanced decline volume, which is very important. Advanced decline volume is down for the day. We're in the negative. So even though we have our indexes up, our advanced decline volume's down. Now, if we switch over to FinViz, we can see just by sorting by volume, we see that the pro shares, short triple Q, and two huge ETFs look like they're getting loaded up on short. So between the Vol D being short and then having your indexes all the way up on a Friday, to me, it looks like the market is unsure. To have advanced decline volume down usually is going to mean we are going up on weakness, right? So, especially heading into like tech earnings. So, that's what's so good about Happy Traders. It can really help you out with those types of things. Now, if we go to individual stocks, we can look at Apple. We're starting to see a little selling off in Apple. We have the Meta earnings coming up next week as well. And that one's a little bit different. Let's go all the way out to the 45-minute chart. We'll reset it and we'll look at the macro view. You can see we had a big gap up in guidance there and a big buy signal with an uptrend on the 45. And if we do the same with Apple on a longer time frame, you can see that we are, in fact, this looks very topish to me. This may not be a top, but it does look topish. So let's look at another one. Let's look at Netflix. And we're going to see what that one looks like on the 45. We had a big gap up on that one as well. So that's going to be another one to look at for sure. Earnings and gap ups and stuff like that. Okay, that's great. The market being up almost 2% on a Friday. Okay, that's great. But having that advanced decline volume down when we have a price going up, that's a problem, right? That's indicating underlying weakness. Now, that could be a scenario where you may want to try to take a short. Now, would you want to necessarily short the entire index? I'd say probably not. That's just me because the index is going to tend to roll with that basket of either 100 or 500 stocks where, when you're just taking a single stock, let's say Meta, and going in, looking at the 45-minute chart, resetting, and then seeing, okay, we're on an uptrend signal and this sucker has really rallied. Now we're starting to turn over a little bit. And then you go over to Apple and then we see, hey, that one already did roll over. That could mean maybe there's an opportunity here for puts. Now, we would never know if we weren't using Happy Trader. All we can see is oscillation and recent buying and then major selling. And to me, this looks like institutional selling when you get these big bars like this. It's interesting that stocks are gapping up and then gapping down. Like, makes me think that there's some short-term stuff going on with the market. And again, the clue here is FinViz. You can see that S triple Q kind of dictating along with our indicator, giving us that heads up like, hey, some of these tech stocks could be a little toppy, could be a little heavy, and that's something to watch out for. Now, if you're a swing trader and you just want to set alerts for uptrend and downtrend rippers, all you have to do is set up happytrader.io, go in, add an alert. You can set up your buy signals. These are our 4 signals right here. And everything else you can just leave default and set whatever notifications you want in app, webhooks, emails, whatever. But that was really what I wanted to go into today is yes, the index can run up all the way through the bell and even gap up over the weekend. But when you start to see big tech kind of rolling over at these tops, that may be something of concern, right? One last thing, let's just go all the way out to the 4-hour chart on a stock like Apple. And you can see that we have like this double top sell signal here and just this weakening and then weakening, and we just can't get direction. Now, sometimes that can just be a major consolidation. If earnings are a total blowout, all next week, we could see a huge rise further in the Nasdaq. But if we get anything that's off even a little bit, we could expect to see big tech potentially sell off. And also, one other thing that's really important to mention is just because S triple Q is showing the top on volume doesn't mean that those are purchased shares. Doesn't mean necessarily that institutional buying block is net short. It could be bullish. They could be selling puts. They could be selling calls depending on the type of strategy that they're using. So they could be doing theta strategies, running theta strategies against these bear 3x shares, right? Depending on what their thesis is. Now, maybe they're expecting, hey, everybody's going to think we're a little toppy and the market's going to go down. We saw what happened with GameStop, right? So we are here and we do have cash and we can, participate in this market just like institutions can. But just be mindful of the point that just because S triple Q, the short NASDAQ, is the biggest traded ticker and we have it negative, it's not printing yet, there's activity in it, it would lead me to believe that it's loading up. Now, there's some other metrics that you can look at to get these types of clues. Hit the subscribe button. We're going to be doing some more videos on some of these clues and how you can get a read on the equity market. But that's going to do it for today's video. My name's Ryan. I'm the CEO and head quant here at Happy Trader. And hopefully this has helped you in some way by going through some of these tickers, evaluating the market overview, and seeing my progression as a professional trader and a professional quant and my assessments of what market conditions can be based on things like advanced decline volume and big tech. How's big tech looking compared to just looking at the indexes? So again, that's going to be today's video. Hope this was helpful and have a great weekend and happy trading.